Hello and welcome to the Savills Cross-Sector Report for 2015, which looks ahead to what will be happening in the UK real estate market over the next 12 months. I'm joined from Savills by Lucian Cook, who's Head of Residential Research, Matt Oakley, who's Head of Commercial Research, and Ian Bailey, who's Head of Rural Research.
Hello.
Gents, a much stronger than anticipated 2014, so are we going to see an equally as ambitious 2015? Matt, what do you think?
Well, 2014 certainly caught me off guard. A very strong recovery in the regions drove returns up to nearly 20%, and I think that has eaten away at some of the capital value growth we'll see this year. So not as strong in capital value growth terms, but actually some real strong prospects in rental growth.
Is there a similar picture in the rural market?
Yes, there is. 2014 was a very strong year, although the market was very diverse, and into 2015 we're expecting it to be more muted.
And Lucian, another phenomenal year for London last year.
Yeah, well, I think 2014 was very much a year of two halves in the residential market. In the first half of the year, we had sentiment-driven, very strong price growth. Second half of the year, we saw the mortgage market review come in and kick in, and that slowed growth and a number of other indicators like transactions significantly over the course of that year. Lead indicators for 2015, again, suggest a relatively muted year in terms of price growth, particularly in London, which, as you say, has had a very long bull run.
And obviously, we've got the general election. What sort of effect is that likely to have?
Yeah, well, I think the general election will coincide with this natural slowdown, but it will create a degree of uncertainty. We've already seen the coalition change stamp duty to offset some of that, and that may give a temporary boost to the market. Nonetheless, other parts of the market, particularly the top end of the market, over 2 million, where there's a threat of a mansion tax, is likely to be much more muted, and buyers, I suspect, will be more cautious.
Of course, there's a prospect post-election of a possible referendum on Europe. How will that affect the rural market?
Agriculture is quite well subsidised, and what happens to EU and what happens to subsidies going forward will be something that we will be watching very closely.
And Matt, how will it slow the general election, the commercial market? Or
I think the general
impact?
election is relatively irrelevant to
Yeah.
the commercial markets. There might be a bit of a flutter in yields, but I agree with Ian, really the lurking horror for my markets is the EU referendum and what it means for the UK as a potential headquarters location.
So taking all those factors into account then, what would be your top picks in each of your sectors for the next 12 months? We start with you, Ian.
My top picks would be large commercial arable farms, where there's good top quartile income opportunities, and then secondly go for the rural estates where you've got the agricultural, residential and commercial assets in one portfolio, and then thirdly the small residential farms where you can improve the quality of the holding and sell hopefully at enhanced value later on.
Matt, how about the commercial sector? Where's your top pick?
I think anything with the word secondary in it, really. It's been deeply unfashionable the last 3 or 4 years. So in London offices, that's probably zones 2 and zones 3 look interesting. If you're looking at retail, I think the secondary parts of the prime regional cities look like they're poised for recovery. And similarly in industrial, really stepping away from the Midlands and the M25 that have been very strong. So play that recovery story, I think.
And Lucian, finally, residential?
Residentially, well, I think now is probably the time that people will look outside of London unless there's some kind of infrastructure-led regeneration gain. I quite like the 750,000 to 1.5 million pound market, not affected to any significant degree by mansion tax or the increases in stamp duty at the top end of the market, but equally not constrained by mortgage market review, tends to be quite equity rich. Yeah. For that pure investor looking for income streams, they will have concentrated perhaps on 1 and 2 bedroom stock. I think there's also an opportunity to look at 3 bedroom stock to diversify their portfolio, because more people are renting, they're renting for longer, they're renting for longer life stages, and that creates demand in that area.
So it's for families who can't afford to
yeah.
get on the housing ladder. So then, across the all sectors, what's the real hot pick where the smart money's going in 2015?
I think for the risk averse, it's probably going to go towards Ian's markets. The primest of prime agricultural land looks like a very safe, secure bet. And for the risk embracers, I think, across all 3 segments, it's really starting to look at development. There's a real shortage of high quality stock of all sorts across the country. So it carries with it risk, but the returns could be very considerable.
So both those are all about the lack of supply, aren't they, really?
They are, yes.
Okay, gentlemen, thanks very much.
Thank you.
You can find more information and in-depth analysis about all of these subjects on the Savills research pages. Go to savills.co.uk/research.